What if I told you that a seemingly obscure piece of legislation buried in the halls of Washington, D.C. could be the single biggest catalyst for a project like Kaspa, potentially unlocking its explosive growth? This isn't just about some boring government bill. This is about survival. This is about opportunity. And if you're holding Kaspa or even just thinking about it, what I'm about to reveal could be a game changer for your crypto portfolio. Stay tuned, because the Clarity Act is here, and it could change everything. Alright, my fellow crypto enthusiasts, let's talk about something incredibly important that's been flying under the radar for far too long: regulatory clarity in the United States. For years, the crypto industry has been operating in this murky, frustrating legal gray area. Projects, exchanges, even you, the everyday investor, have been caught in the crossfire, constantly guessing whether a digital asset is a security or a commodity. Think about it. Every time a new token launches or an exchange wants to list a hot new project, they're playing a high-stakes game of legal roulette. The SEC, the Securities and Exchange Commission, is constantly looking at projects through the lens of securities law, which frankly was designed for traditional stocks and bonds, not decentralized digital assets. They use something called the Howey test, a decades-old Supreme Court ruling to determine if a token is an investment contract and therefore a security. If it is, boom, instant regulatory nightmare. Strict disclosures, endless legal filings, investor protections that are completely ill-suited for open-source, decentralized networks. It's a recipe for stifling innovation and driving talent overseas. But then you have the CFTC, the Commodity Futures Trading Commission. They regulate, well, commodities. Think gold, oil, wheat, and crucially, they also oversee Bitcoin and Ethereum, which have generally been classified as commodities. The laws here are far less restrictive, allowing for easier listing on exchanges, smoother development, and generally, a lot more freedom for a project to grow without constant fear of a legal hammer coming down. This jurisdictional tug-of-war has been a massive roadblock for the entire decentralized finance, DeFi, and blockchain technology space in the US. Developers are literally blocking US users, stifling crypto adoption and market growth. We've seen countless projects hesitant to launch or expand in the States because the regulatory landscape is so unpredictable. This regulatory uncertainty is a major drag on the entire cryptocurrency market, and that's where the Clarity Act steps in. The Digital Asset Market Clarity Act of 2025, or simply the Clarity Act, is a bipartisan effort attempting to bring, well, clarity to this mess. Its core objective is incredibly simple yet profoundly impactful: to finally draw a clear line in the sand, distinguishing what constitutes a digital security versus a digital commodity. Now you might think, okay, a bill, big deal. But trust me, this is a huge deal for the future of digital assets in the US. The bill has already gained significant traction in the House of Representatives, with bipartisan support that's truly encouraging for crypto policy. Many insiders are optimistic about its passage there. However, this is Washington, D.C., and nothing is ever a done deal, especially when it comes to emerging technologies like crypto. The Senate, that's where the real battle lies. We've seen bills get stalled, debated, and sometimes just completely vanish in the Senate. There's a lot of political noise, especially with ongoing discussions around crypto campaign donations and their perceived ties to certain political figures. This kind of political interference can make the legislative process incredibly challenging for even the most common-sense bills. The stakes are incredibly high. If this bill doesn't pass, we could remain stuck in this regulatory limbo, watching other nations pull ahead in the global crypto economy. It means continued FUD, continued uncertainty, and a slower pace of blockchain innovation for American companies. This isn't just about theoretical legal distinctions. It directly impacts institutional investment, developer activity, and ultimately the price performance of countless altcoins. But here's the kicker. If it does become law, it could usher in an era of unprecedented stability and growth for decentralized projects and the entire crypto ecosystem. And that, my friends, brings us to why this is so critical for one specific project: Kaspa. Now let's talk about Kaspa, KS. Why is Kaspa in such an incredibly strong position to benefit from the Clarity Act? It all comes down to its foundational principles and its unique launch. Think back to how many projects flooded the market with initial coin offerings, ICOs, often raising millions from venture capitalists and allocating huge percentages of tokens to insiders before anyone else even had a chance. Those projects, by their very nature, often reek of an investment contract and are prime targets for the SEC. But Kaspa? This is where it gets exciting. Kaspa had a fair launch. Let me repeat that. A true fair launch. There was no ICO, no massive token sale before the public, no venture capital funding, no backroom deals with big money, no pre-mine, no token set aside for the team or early investors before mining began, no insider allocation. Everyone started on equal footing. It launched as a pure proof of work, POW, open source project, just like Bitcoin did. Miners started from scratch, competing to secure the network and earn new KS tokens. This is the very definition of a decentralized network, designed for community ownership and permissionless participation. Because of this impeccable, clean launch, Kaspa checks almost every single box that would qualify it as a commodity under this new, clearer framework. If the Clarity Act passes and Kaspa is formally recognized as a commodity, the implications are absolutely massive. Imagine this. The biggest crypto exchanges in the US would no longer have to worry about the significant legal risks associated with listing KAS. This could lead to far wider Kaspa accessibility and liquidity, drawing in a whole new wave of retail investors and institutional capital. Developers would feel significantly safer building on the Kaspa network, knowing they're operating within clear legal boundaries. This fosters ecosystem growth, attracts dApp development, and accelerates innovation on the block-DAG architecture. Large institutions, asset managers, and traditional financial firms that have historically shied away from the digital asset space due to regulatory ambiguity might finally open their doors to KS. This is the kind of mainstream adoption that can drive exponential market capitalization and price appreciation. Projects looking to utilize Kaspa for high-throughput payments, tokenized assets, or other demanding applications could move forward with confidence, free from the constant threat of regulatory pushback. This fuels utility-driven demand for KAS. The lack of regulatory clarity has been a significant bottleneck for the entire Web3 space in America. But with the Clarity Act, we could finally see a clear separation between legitimate decentralized projects and the more centralized, security-like offerings. This bill wouldn't just give projects like Kaspa the green light, it would provide a regulatory roadmap for the entire industry, fostering an environment where innovation thrives and investor confidence soars. Kaspa's commitment to a fair, decentralized, proof-of-work model combined with its innovative block-DAG technology for rapid transactions truly positions it as one of the projects best equipped to capitalize on this monumental legislative shift. If the Clarity Act crosses the finish line, it won't just be a fresh start for Kaspa. It could mark a new era of growth and legitimacy for the entire crypto market, unleashing a wave of technological advancement and wealth creation. So what do you think? Is the Clarity Act the key catalyst for Kaspa's next big move? Let me know your thoughts in the comments below. And if you found this deep dive valuable, hit that like button, subscribe, and ring the notification bell so you don't miss our next analysis on the ever-evolving cryptocurrency landscape. Crypto disclaimer: I am not a financial advisor. This video is for educational and entertainment purposes only and should not be considered financial advice. The cryptocurrency market is highly volatile and speculative. You could lose money, including your entire investment. Always conduct your own thorough research, DYOR, and consult with a qualified financial professional before making any investment decisions. Never invest more than you can afford to lose. Remember, always do your own research. Stay safe out there, and I'll see you in the next video.